Welcome to CEO Money. I'm Michael Yorba. Thanks for joining with us. I've got Nate Abercrombie, investing with the Buyside, on the show with us today. Nate, welcome to the show.
Michael, thank you so much for having me. It's a pleasure to be on.
I'm glad you're here. All right, tell us about your background. When did you get started investing?
First time I ever bought a stock, I think I was in my teens, and I think I lost a lot of money. And it took a long time for me to figure out, I guess just to figure out that to invest, it requires a system. You'd have to have principles. You have to have certain things in terms of your overall investment philosophy needs to be pretty well defined. And it took some time for me to learn how to invest. And I was a professional investor at a mutual fund company here in Denver for about 6 years before I decided to leave investing and start up a podcast.
Why did you decide to pick up podcasting?
Well, there've been some pretty significant changes in the institutional money management business. One of those changes was just passive investing. You have a lot of active asset managers who they realize that passive and ETFs, passive investing, is a big threat to the active money management business. And so you saw, at least my experience, my direct experience was you saw an active manager adjust the strategy in such a way that they could defend themselves against just the rise and growth in passive investing. And so that was one aspect of it. Another aspect of it was some regulatory changes that came out of the EU called MiFID II. Makes it very difficult for professional investors, research analysts to do their job. It essentially just the old system is changing, and the changes are coming pretty rapidly. And one of the big changes was corporate access. So as an investor, one of the things that you do is you sit down with senior management of a public company and you talk to them and figure out, what the outlook is, and you can learn about their business. And the dynamics for corporate access are changing such that it just made it very difficult for at least the analysts and the portfolio managers at the firm that I was working for to continue meeting with senior management on a regular basis, just due to some, again, MiFID II. And it's a complicated regulatory change that I don't know if you've had someone on your show previously talk about it, but it's having very large, very significant effects in the U.S. institutional money management business.
Like,
so
you don't have access to C-suites, so you can actually get a deep dive on management style, management culture, management forecast.
Exactly. Yeah. So last year about this time, I sat down with my team and we were talking about changes to the budget that were a direct result of MiFID II. So my firm was acquired by merged/acquired by a British asset manager, which then resulted in the firm that I was working for to be directly impacted by these regulatory changes. And so I was sat down last year about this time and told that my budget was going to get cut by 65%. And I was told specifically to not expect to have any more one-on-one meetings with management teams at conferences for the foreseeable future. And for me, that was a shock. I mean, that's a big component of the research process, is sitting down with management teams and talking to them. And for my management to say, you're not going to be able to do that very often next year or even the next few years due to these changes. It was an eye-opening experience for me individually and professionally. So just thinking about how I'm going to do my work, how I'm going to do my job, these changes were going to have a significant impact. There's also another component to it that I really would like to highlight, which is I also think there's definitely some unfairness in the stock market, in the sense that some people have advantages that other people don't. And so what I wanted part of the thinking behind the podcast was to also deliver something that institutional money managers have that regular investors and even investors at smaller hedge funds or smaller investment firms, they don't have the same advantages that a big money manager like the firm I was working for has. So I wanted to give that to the broader investment community, just give them an opportunity to hear the conversation, hear about the business. So I feel like I'm doing my part in terms of just giving back.
Let's drill down into that. Let's drill
Sure.
down into the content that you provide on your podcast. What is somebody going to hear when they tune into your podcast?
So just the other day, I had AES Corporation on the podcast. I had the CFO on, and most of the time these conversations start out with just a background of the CFO. So it was a CFO of AES Corporation, Tom O'Flynn, and these conversations start out with a background of the person who's talking to sort of, get you more comfortable with the person who is being interviewed. And then we get into the business. I have my guest talk about the history of their company and the history of the industry. And then we get into the outlook, just understanding maybe, I should also highlight the fact that I'm trying to bring companies or management teams from companies that whose stock appears, at least on a relative basis, undervalued relative to the rest of the market. And sometimes that means that there's a misconception or the company is misunderstood by the broader market. And I give my guest the opportunity to describe what those misconceptions are. They talk about the outlook, and then we get into the financials. And the financials component of the conversation is really more than anything else to highlight why the stock appears undervalued, and then also provides the listener the opportunity to hear the CEO or the CFO talk about what they think is most important when considering an investment in this stock, what valuation metrics are important, what to ignore, what to focus on.
Okay, got it. I got it. I'm hesitant to ask this question, but I'll bring it up. Your revenue model, what is it based on?
But the podcasting revenue model is based on growing the number of listeners so that you can reach out to potential advertisers and see whether or not they would like to advertise on the program. I think that today, just given the growth in the podcasting marketplace, there are a large number of really popular podcasts, and the advertisers, I think, that they have, I don't want to say they have the pick of the litter, but they definitely can be a little bit more choosy when they select who they are going to advertise with. And one of those things that they focus on is the number of listeners that you have. So there's almost like a threshold number that you need to target before, or you need to achieve before you can actually reach out to an advertiser and see whether or not they would advertise on your podcast. So advertising revenue is the primary sort of revenue generating component of the business. But I also accept donations because there is a thought that maybe I would like, it would be great if I had enough donations or enough reoccurring revenue that I didn't have to reach out to advertisers and I didn't have to burden my listeners with, hey, have you ever used this trading platform, or have you ever used this financial data software that is really helpful? And I would like to just sidestep that and just accept donations, but nobody wants to give away money for free.
Now, you used to be a money manager. Are you still managing money today?
Just my own money. Yeah.
Okay. In that process of managing your own money, what are you trading?
Well, I'm heavily invested in energy. I own a lot of midstream stocks, and then I also own, it's kind of a subsector of the power business. They're called, the names are changing, but competitive power producers, or IPPs. Now they call them integrated power producers. It's companies like NRG, Vistra. They're actually the last two pure play competitive power producers with retail businesses in the market today, because they're just volatile stocks and they're misunderstood. This is, again, sort of my learning experience as an investor. I focused quite a bit on energy and the energy sector, and because of the cyclicality of the energy space with commodity prices going up and down, you can find some really interesting opportunities to buy something whenever you think, well, commodity prices have gone down significantly. They could go down a little bit more from here, but if you feel comfortable with kind of what you think, the lower bound is for a commodity price, and you can buy an asset or buy a few shares in a business that has leverage to the commodity price, and that asset has dropped in value significantly, I feel very comfortable making investments in those types of cyclical, highly volatile types of businesses, because I think that, again, they're misunderstood. A company like NRG and Vistra, I had both of those. I had the CFO of NRG on the program and the CEO of Vistra on the program. And if you can listen to those interviews where these guys are talking about how stable the business is, but the market perceives it to be much less stable and much more exposed to swings in commodity prices. As an average investor, if you get to listen to some of these guys talk about their business and emphasize how stable the business is, that should give you some more comfort in making an investment in some of the companies that come onto the podcast.
So you're focusing the content, the conversation, on fundamentals is what I'm getting.
Yes, yeah, fundamentals and outlook, and again, highlighting what's misunderstood, or what the guest thinks is misunderstood by the market about their stock.
Got it. Where can our audience find your podcast?
They can find it anywhere on any of the podcasting platforms that are out there: Spotify, Apple Podcasts, which used to be iTunes, but I think they're really pushing the name Apple Podcasts, Google Podcasts, and then on the website investingwiththebuyside.com. You can listen to any of the programs there.
Nate, I think I'd like to extend an invitation that when you have some of these interviews, you can come onto our show, give us some prelude, little inside peek as to what the bigger, more in-depth conversation is on your podcast. I'd love to have you come on and say, I was just talking to Bill or Joe or Bob and we could talk about what you talked about, and then people can get a deeper dive onto your podcast. How do you feel about that?
I think that'd be great. Yeah, I'd really enjoy that.
Good. Nate,
thanks
for being on the show. Appreciate it.
Thank you so much for having me, Michael.
My pleasure. You've been watching CEO Money with Michael IwtB. Like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel.